Hi everyone, this is Business 100 Introduction to Business, and we're back in our new fully online format. I promised you just a little bit more information about a big report that we have coming due, report number 2. For us, it's due on April 10th. And of course, what I'm looking at is our Canvas course homepage. Just a reminder that this is where you can keep track of our calendar. You'll notice that I changed the due date on Chapter 8. It's now due March 23rd. If you've already done it, great job. And I also added a quiz. Quiz number 2 is due March 25th. Remember, this is going to replace our pop quizzes. It's open book. Just click on this. You'll see the questions that you have to answer. You can upload them in a Word doc or PDF file. Super easy. But just make sure that you get in there and do that quiz before the due date. All right? I'm going to spend the rest of this short video talking about this report right here, report number 2. It's due on April 10th. And if I open this, you'll see the assignment prompt. Remember, you should be already collecting your financial data. There are really 3 main components to this report. You're going to do your income and expense statement, which you already started. You're also going to make a balance sheet. I'm going to show you a little bit more about that in just a second. And then what we want to do is tie it all together with our goals. And you're going to write a detailed plan for how you're going to achieve those goals. So first we're going to get your data, we're going to make your financial statements, and then we're going to come up with your plan. So here we have just an overview. This is just my overview of the assignment. If you click on this, it takes you back to collecting your financial data. You'll see that this is worth a lot. It's worth 100 points. There's a lot of components here. And here's the rubric down here. But what I want to do now is I want to go ahead and open up our PowerPoint show so that we can look a little bit in more detail about the specifics of what you've got going on here. So your financial report has 3 components, right? The income and expense statement, and that's really, for you, probably the same as your statement of cash flows. It's money in and money out, what you earn and what you spend. Your goals, short-term, medium range, long-term, we want to get you to a point where you have some savings and then figure out what you're going to do with that. And then your balance sheet, the balance sheet is really a snapshot look at what you're worth in the moment. All right, but let's start with your monthly income. So, and I'll show you a template for this in just a second, but what you should be figuring out and recording now is, do you have money coming in from jobs? If you're paying yourself out of savings, then technically you have income from savings. If at the beginning of the semester you got a student loan, then technically you have income from loans or grants. Same thing if your family pays you a little bit of money. That shows up as income. Now, let's say that you have money in your savings account. That savings account will also show up as an asset on your balance sheet. Every month as you take money out of your savings account, it shows up as income. You're paying yourself essentially a salary. And then what you're going to notice is that the balance on your balance sheet for that account will go down every month, unless you put more money into it. So there's a little bit of connection between the balance sheet and the income and expense report. If you're moving money from an asset like a savings account and you're paying yourself a salary. But right now, just focus on where's your money coming from. And then again, this is probably a good starting point for what you're spending your money on. We want to take a look first at your fixed expenses. Are you paying rent? Do you have utilities, your phone bill, your car payment? You might pay your insurance or your car payment every month, but if you pay an insurance bill, say twice a year, take a look at the full amount, divide it by 12, and then put that monthly portion of it on your monthly expenses. Don't forget to include, same thing with school expenses. You might pay for a lot of your expenses at the beginning of the semester, but see if you can figure out a monthly breakdown. Same thing with groceries. That might vary month to month. If you can get a monthly average, that's great. So figure out your fixed expenses, And then this is where a lot of people have trouble, is with the variables. And if you've been tracking your expenses as I asked you to do, this is where you're going to get a lot of information. Might come as a bit of a surprise to you. Are you spending a little bit more on fast food or entertainment or dining out or any kind of other recreation? That's okay, but we just want to know what it is and then maybe perhaps make an adjustment. All right, and then the calculation is super simple. Take all your income, subtract all your expenses. You're going to either have a gain if it's positive or a loss. And the big question is, are you at break even? It may be that you're spending everything that you have. That's okay while you're in school. What we want to do is, if you're not at break even, we want to get a plan to reach break even. Eventually, we'd like you to save some money, exceed break even. Now, when you pull this all together, you'll find lots of templates online. You can do this pretty simply on your own, and you don't have to be fancy about it. This is just an example, and they're calling this a cash flow statement because it's really just for you, money in and money out. Where's your money coming from? Where's it going? And then you'll notice at the bottom we have net cash flow. So income minus expenses, and then is that a gain or a loss? So that's what you want to show first. That's component one. Now, this is a table for how to construct some goals. Just brainstorm everything you want to do, short-term, medium range, and long-term. In the next couple of years, are you planning to graduate? Do you want to buy a car? Are you planning to take a vacation? Do you want to save money for a business or a home? You'll notice that for each goal, you need to have a date that you want to complete it, the total cost, the resources that you have, and then don't forget to include your action steps. That's your detailed plan, your step-by-step plan for how you're going to achieve each goal. Remember that I grade based on detail. So I like to see lots of detailed action steps. And it may be that these steps are linked. You might need to graduate, get a better job, then save money. Maybe you're going to do an internship, then get a better job, then save money, and eventually you'll be able to save toward your home. When you've mapped out your goals, try and answer these questions. So again, you have a chart and then some explanation. After you've listed your goals and you figured out when and how much and your resources, go ahead and describe in your own words what you plan to do. Now I'm going to move on to the balance sheet. The balance sheet is another financial statement. You may have done this in your accounting class. We're going to do a super simple personal balance sheet, and it's really what you own, your assets, minus what you owe, your liabilities. And we're going to use the simplest formula. Assets minus liabilities is equal to your net worth. Sometimes you have an asset like your car that you own plus the bank if you have a car loan. And so the owner's equity is the portion of ownership that you have. And the way we show that is we say the asset, the car itself, might be worth $10,000. You own $5,000, but you have an outstanding loan of $5,000. So the asset is equal to the liability plus the owner's equity. That's really why it's called a balance sheet, because those things always balance. Whoops, sorry about that. All right, so now we've got a list of our assets, current and long-term. Current assets are the most liquid, easily convertible to cash. Long-term assets, things like property and equipment, those are tangible assets. We want to hold on to those. And then sometimes, like your car or business equipment, those can be depreciated over the life of the asset. We then also have investment assets. And so when you list your assets, you list your current and then your tangible assets and then your long-term assets. The rule with assets is we want to have the liability paid off while the asset still has value. And with investment assets, we like to see the value of that asset go up over time, as opposed to things like your furniture or your computer, which gets used up over time. Same thing with your liabilities. We're going to list current liabilities and long-term liabilities. Current liabilities might be the balance on your credit card if you have a dentist bill. Long-term liabilities are things that you're going to pay off over a course of a couple of years or longer, your car, your home. Now, don't confuse your monthly expense. So every month you might pay $200 on your car loan. That's the monthly portion you pay every month. You show that on your expense statement. The rest of the car loan is the liability. That's the balance you haven't yet paid. Again, we want to try and get that loan paid off while the car still has some value. So you're going to list all your assets, current and long-term. You're going to list your liabilities, current and long-term. You'll notice with things like your car loan that as you pay off each monthly portion, each monthly bill, as you pay that off, the liability goes down over time, and that's what we want. All right, so here's what a sample balance sheet might look like. Again, these are just templates, but you can see you're going to list your assets, your tangible and long-term, total them up, liabilities, short and long-term, total assets, total liabilities, and then your net worth is really just, let me see if I can expand the screen here. There we go. Your net worth is total assets minus total liabilities. Okay, so now what we want is your plan to build wealth. Bear with me here. Okay, so here's your plan to build wealth. You're going to have 3 components to this report: the income and expense statement right here, your goals, what you want, and what it's going to cost, your plan to reach your goals, including the timeline and your action steps, and then your balance sheet, your net worth, and that should say net worth. What is your net worth now, and how can you grow your wealth? So your balance sheet gives you a moment in time look at all you have. Since we're doing this in real time, let's fix that. All right, your income and expense statement, your goals, how are you going to reach them, your net worth, and how you're going to grow your wealth. All right, so that is a snapshot look of what's coming due for report number 2.